In today's video, we're going to be discussing the top dividend stocks that I combine with Yieldmax and Roundhill funds. These funds and these stocks that I own help me earn over $600,000 per year in dividends now. This number should be more like 500. I don't expect every month to be this good for Defiance, but we're over 600,000 now per year in dividends. And if you can't see that number, just zoom in below. And we're outperforming the market still. Even after the recent pullback, we're still up 24% for the year. In the last video, we were up 19%. Now we're up 24%. The S&P's up 14%, the Nasdaq's up 13%, the Dow's up 7%, and the Russell's up 3%. So we're beating all of the indexes with Yieldmax, Roundhill, the stocks that I own, and margin usage, which all again helps me live free from 9 to 5. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. My margin interest is low because people ask me all the time, well, what about your margin interest? Well, I've negotiated down twice. Many of my clients who bought my e-guides did the same thing because when you buy my e-guides, you get my phone number for free for life. So I'm not worried about my margin leverage with margin because it's going to go away every month. We make about 40 to 50,000 in dividends per month. And so that's going to take away my leverage each month. And I'm not worried about my interest because it's so low. It's around 6% interest. So today we're going to be discussing the best dividend stocks that I own to combine with Yieldmax and Roundhill funds. As you all know, Yieldmax and Roundhill funds are 50% maintenance. So we have to have some stocks because 50% maintenance is way too high. 50% maintenance sucks up 50% of your equity, okay? Not only do you get $4 for every $1 you put in your account, but you get this available withdrawal number to where you can swipe your E-Trade card and go wherever you want in this world. You can buy cars, clothes, shoes, whatever you want with your margin debt, and it's lower interest than credit cards. And so you can withdraw out of your debt anytime you want. This number here, I can withdraw from this 360 at any time, add to my debt, and my dividends pay back at the end of the month. But you have to keep your available withdrawal high enough to withstand over 20% corrections in the market and still withdraw freely from your account. Why do I say all this about my available withdrawal? Well, if I don't, people are going to say that my margin strategy is reckless and I'm going to lose it all in a crash. Well, we outperformed during 2022 because we have Cornerstone and it drips at the bottom. So it was dollar cost averaging for us at the lows, and our margin was paid back by our dividends each month. So if you have 50% maintenance, that means it sucks up half of your equity, which means you have less cushion in the event of a market fall. You're going to get margin called much quicker. If you need help understanding maintenance, that's in my Volume 3 e-guide. Maintenance is the secret to everything that I do. You can go to other brokers with lower maintenance, but they might not have the special drip for Cornerstone, the 21% dividend that drips at the bottom. And you don't want to just buy more of these dividend funds just because they're lower maintenance. You're going to get way over leveraged that way and hurt yourself in a market fall. So I kind of like the 50% maintenance at E-Trade because it helps keep my risk in check, okay? It helps me not use too much margin so I can safely live free from a 9 to 5. And Yieldmax is largely stock based. So if you have 50% maintenance and you're stock based, you're going to fall by the amount of stock. So if you have 50% maintenance in a stock versus a fund, you're going to fall a lot harder in a stock because stocks fall much harder than indexes. And with 50% maintenance, you're going to cannibalize your account way too quickly. That's why I put most of my money in Defiance, Roundhill, and Cornerstone because they're largely indexed. I have some Yieldmax stocks, and then I have these other blue chip stocks that we're going to discuss in one moment. So Roundhill, Cornerstone, and Defiance give me exorbitant dividends. They help me outperform the market, but the stocks that I own give me diversification away from these funds that are not traditional. We don't know how these funds are going to perform in the coming years. So I like to have stocks because they're not only the old-fashioned way to get ahead, but they shield my volatility from Yieldmax, Roundhill, and Defiance because, again, those are largely indexed. And sometimes the indexes are swayed more by technology. And so I like to buy these names that I'm going to give to you in today's video because they help go up on down days. When tech is down, these names usually go up and they give me a nice balance. They shield the volatility out of my account once again. And they're low maintenance, so they don't hurt my account by owning them. Plus they have dividends, which offsets my margin interest, and they compound those dividends over time. A lot of these blue chip companies raise their dividends every year, so that's going to help us compound and grow our wealth. You want to stay indexed with Roundhill, Cornerstone, and Defiance because the indexes move much smaller than stocks, as I always say, and so Cornerstone is a 5-star fund, and it moves upward left to right here on its chart. But if you look at a chart of it on E-Trade, you'll see it goes sideways to down. That's because you have to factor back in dividends, drips, and rights offerings with Cornerstone. If you need help playing Cornerstone, that's in my volume 4 e-guide. And Defiance falls less on down days, okay? QQQY, it's a very important vehicle to have in my account, okay? Yes, you can see on a chart here, it moves sideways to down on a 1-year chart. People say the erosion in this fund is terrible, but I like the 70% dividend that it gives me. QQY is also 30% maintenance. And if you look at a chart here of QQY on Discord, which Purity Control submitted to us on Discord, I'm very thankful for that. This chart here, QQY, shows the real uptrend. It shows the true price performance of QQY. So we have all kinds of information like this in Discord if you're ever interested. We also give you the Cornerstone rights offering announcement here in Discord should you need more help playing Cornerstone. I don't get paid by Cornerstone. I don't get paid by Yieldmax, Defiance, Cornerstone, or Roundhill funds. I'm just sharing what works with you in my videos. So here are the stocks that I bought recently. I bought them a few months ago, okay? I've been pounding the table on staple stocks, as you can see here. And this is just one of my videos from my lives, but Altria, look at this chart. We bought it down here in the 40s, and look at this straight up move to 55. Altria, we took our gains in Altria. We have every Staples name because Staples have nice dividends. Look, Altria has a 7.5% dividend, as you saw there. So I was taking profits in Altria, but then I saw the rotation back from Staples to tech, and that's when I got really bullish on the market. Okay, I got really bullish recently because, as you can see here by the chart, QQQ, it is coming off of a nice support level. Okay, we're saying it's make it or break it time for Yieldmax funds. Look at this chart, perfect bottom. Okay, the uptrend is now intact. The uptrend is resumed, okay? And so we had this perfect bounce here between the 100 and 200-day moving average, this perfect consolidation pattern, and I was pounding the table to all my members to buy here. So that's why we're up 10,000 today, okay? 9,000 or 0.79%. But if you look above, that beats the S&P at 0.75. The NASDAQ was up 1%, but we still beat the NASDAQ when you go to a complete view. When you factor back in my margin, you can see that we're up here 1.14%. So we actually beat the NASDAQ and we beat the S&P. We beat all the indexes today. That's usually what happens. So we're beating all the indexes on a daily basis, but also on a year-to-date basis. That's really hard to do with dividend funds that supposedly decay and go sideways to down over time. How do we keep getting these days gains each day and these dividends each month? Well, we have those funds that I listed to you ad nauseum: Yieldmax, Roundhill, Cornerstone, and Defiance, but I also have these blue chip stocks. Okay, I'm just going to push play here on one of my last videos, and you'll see this column here. Look at this column: 11%, 12% for Johnson & Johnson. Okay, look, Mondelez, 11, General Mills, 14, Dr. Pepper, 12. All these stocks have had huge moves, okay? Conagra Foods, 11%. If you see any stocks here that are not in the green, it most likely means that they're either not staples or they're a different sector or there's some kind of Yieldmax holding or something like that. And yes, some of them are down like Estee Lauder, but I live and die by the indexes, so I'm just going to keep building my position. I keep them all equal weight, as you can see here, 2,000, 2,000, 2,000, 2,000, 2,000. I mean, and they go on and on, okay? We have Kenvue, which is Tylenol. We have TAP down low. I mean, all these here are working very well for us, and most importantly, they're up on down days. A lot of times the market's not even down. Everyone thinks the sky is falling when the market's down, but the market's largely driven by tech, and then these stocks will be up instead. Okay, look at Johnson & Johnson straight up from the lows, 144 to 168 it looks like there, so 164. So we've had these straight up moves in staples, which have been shielding our account from unwanted volatility with Yieldmax, Roundhill, and Defiance funds. So I like QQY for the 30% maintenance, for the huge dividend, and it's down less than the market on down days, which is huge when you're in margin. So that acts as some safety for us. Cornerstone also acts strong on down days. As you can see here, it barely even pulled back during the recent correction. And then we have our staple stocks that act very strong for us on down days. They give us extra protection with our triple leverage shorts. So something like an SPXU, we have all of our triple leverage shorts as well. We have SPXU, SQQQ. I have these triple leverage shorts on that are at the same allocations as my staple stocks, around 2,000 to 3,000 worth, because these help shield the rest of my account. SPXU acts as a married put of sorts with my Cornerstone, Yieldmax, Roundhill, and Defiance funds. And then also I keep my put options on at all times. Okay, so I can withstand over 20% corrections of the market, but should we have over a 20% correction of the market and I get closer to a margin call, well, we would make more money than we lost in the event of a market crash because my options that I use insure my account against falls. During the recent market crash, we're up almost 2,000% in my options. We're up 800% on Black Monday alone, and then the days before that, we're up hundreds of percent each day. If you need help insuring your portfolio like I do with put options, that's in my Volume 5 e-guide. I sell options here to lower my margin, lower my risk. That's in my Volume 6 e-guide. And then I buy put options to insure my account past a 20% fall, which again is in my Volume 5 e-guide. So I keep my put options on for insurance, my triple leverage shorts, and I have these staple stocks that act as a defense when the market is down. So we love these staple stocks, okay? Look at McCormick straight up on his chart as well, all right? Check out Northrop Grumman. Look at how well that stock did for us. We did a video, Fly Me to the Moon, if you remember that video a few months back. And now look at Northrop Grumman. If you look at this chart here, we caught it at the absolute bottom. Look at this recent move by Northrop Grumman, straight up, okay? I went ahead and sold Northrop Grumman right around here at resistance. Sure, it's gone higher from here, but I don't care. I made the easy money with this move from 420 up to about 500. All right, so if you need more help doing what I'm doing, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to Discord for life, and you get my phone number for life, so keep that in mind. You know, I think being up 24% for the year while earning over $600,000 in dividends is remarkable, and again, that should speak for itself, okay? So again, if you like the video, please click like or subscribe, and I'll talk to you soon, everyone. Thanks. Bye-bye.